Nikkei, you can see, is almost 200 points in the green right now. Hang Seng is also doing decently well. It's come off a lot from the highs actually in the past few minutes.
I think at all-time high 15,432, there will be some resistance, there will be some profit taking.
Looking at about 30 companies to be considered, there will be 8 specified electronic components that will be targeted under this PLI scheme.
The market opens 150 points higher on the Nifty, 15,333, and about 500 points higher on the Bank Nifty at 36,400.
IT definitely gives a lot of comfort in terms of having a lot of downside protection.
We also seen good demand in the coming months in both two-wheelers and passenger vehicles.
It's off the highs, of course, but 15,276 is where we stand at.
The valuation of 100-year maturity is what they have asked SEBI to withdraw.
Is we want to be a very SUV-focused business.
In the last 1 month, even if the cases have suddenly doubled and tripled, but the death rate has become half.
Market's pretty much at the day's lowest point. 15,188 is the low. We're at 15,190 or so.
Okay, that was long time back, I can tell you that. We are now almost breaking. In fact, intraday we did break 15,000. In fact, is that rate right? Okay, there's a slight confusion there. I think that rate is not refreshed. Let's just refresh that. The current rate is 15,007 on the Nifty. We'll just refresh that. Yeah, there it is. 15,007, 15,008 is what you have on the Nifty. The culprit, once again, you may want to call it, is the bond yield. Back to almost 1.6, which is almost the recent peak, and the dollar index also inching higher. So all of that not helping market. And of course, on top of that, this morning's gap up really made the market a bit vulnerable for this kind of a second half. Let's see what the last hour brings for us, last hour of the week as well. Surabhi, good afternoon.
Good afternoon, Anuj. I guess you called it, right? You were saying that we need to tread with caution after getting that gap up, and that's how it's played out. Though let's keep the global context in mind as well. As Anuj mentioned, I mean, it's really everyone's got their eyes on the US 10-year right now. The last time when the mayhem played out in earlier March, we were at about 1.6162 thereabouts. That was the intraday peak. And today we are at 1.594 last I checked. We should pull up the US 10-year yield. And that's the biggest talking point. European markets are not, looking as bad, perhaps because, we had that 1 day of a holiday in between. But some of the regional markets, I mean, the Hong Kong Hang Seng, for instance, that's also sold off. So, Anuj, where does it really leave us? Because every time you're going to that all-time high level, some trigger or the other is coming, and risk aversion is back.
Well, for starters, Surabhi, should not look at the Dow in the night and spoil your sleep. The next morning, the market does completely different thing. I know I've said this many times. You do not trade SGX Nifty. You trade the Nifty here, and this whole obsession about overnight SGX and morning SGX, I think has to stop. So the gap up itself was nowhere near the SGX Nifty high. And one thing which I've noticed is, and I made this point in the morning as well, that on days like today, you normally see the SGX Nifty makes either the low or the high for a reference point. If it's a gap down, then the SGX Nifty low is never violated. If it's a gap up, the SGX Nifty high is never violated. That's one thing that I've noticed in the market. The 10-year bond yield is surging again. The dollar index is at 92. I think also we need to stop looking at Europe and taking cues from there, because this phase is about the outperformance of developed markets versus the emerging market. Dow Jones is at all-time high, right? So there's clearly a bit of an outperformance for the DM universe. I think this morning you were presenting some stats. I was just looking at those. They also corroborate that. The other big factor for this market is that the FI buying has been missing. Now, gap up is fine. And futures trading, you can do whatever you want to. A market will sustain gains only if you have hard commitment to buy an HDFC bank or an ICICI bank or an HDFC or an SBI or an Infosys. That has been missing in the market. On Wednesday we had a sell number of 16 crores. That's not going to take market higher beyond a point. Gap ups and all is fine, and that's been the trend. My worry now is that so far the market's texture has been that gap ups get sold into, but the market still ends in the green, and the market's slowly climbing higher. Now, because of this US bond yield issue, is that changing just in the near term? And I think does 14,500, 14,550 again come back into picture? I think too early to call that, 14,900, 14,950 is the first sort of port of call. If you start to close below that, then I think perhaps that theory will open up again. But suffice to say that you cannot and should not chase gap ups in this market. That's that's almost like a sitting duck. You chase a gap up, you're dead meat. That's very clear.
Absolutely, and chase a gap up, given that we're very close to all-time high levels. Just a further point, Anuj, today on sectors, I think it's a top-down risk-off kind of an afternoon, right? Also, we're getting into the weekend. But if you look at the composition as well, look at the heavies on the right side of the screen. There's Reliance, all the banks, Bank Nifty is dragging big time. There's not much to counter, barring one Infosys. So, any thoughts on the way the sectors are playing out? Mid caps, by the way, are falling lesser than the large caps. So, does this market still feel that this too shall pass, one more tantrum, and we'll get back to
Absolutely. I think that's the way it is. Also, the Bank Nifty opened with a bigger gap and is now down more. IT, on the other hand, is still relatively outperforming. Infosys, I think, is still in the green. So, I think this theory that I had in the morning that if the market continues to do well, perhaps the Bank Nifty will outperform, and the market's given a clear answer. So, in the near term, it's about perhaps some kind of a risk off, and in that environment, perhaps IT outperforms. This mid-cap outperformance will be there, Surabhi, till the time the Nifty is not violating, say, 14,850, 14,800. If Nifty starts to violate 14,800, 850, even mid-caps will fall. But I'll say one thing. The mid-caps are in a structural bull market, and if you're good quality mid-caps, there's no reason to sell those because that is well and truly intact.
Okay, absolutely. So there's plenty to talk about and discuss, and we have lots of big voices coming up on the show to do exactly that. Here's the lineup. The market, of course, has stumbled after opening at highs this morning. The concerns back. The US 10-year Treasury yield climbing up again is the key focus. Banks take it on the chin, and they are the key underperforming indices today. So what is this whole concern about bond yields? Is it over? Is it going to continue? We get the big man in. Christopher Wood of Jefferies weighs in on the bond versus equity equation that's playing out. So that's the big interview coming up. We also get you why Credit Suisse is negative on insurance companies. That's the special standout brokerage that's coming in. It's hitting both of those stocks on your screen. So we'll get in Nimesh to understand what that report really is saying. The HPCL management has told us that new verticals like the gas segment will drive growth for the company going forward. And of course, they also talk about how perhaps fuel demand will remain intact despite the high prices. So that conversation with Mr. Surana and analysis around the stock coming up as well.
Okay, but first up, last star calls, and we have Mitesh now joining us for that. Mitesh, good afternoon. What a reversal for the market. Your thoughts and what would be your stock calls now?
Good afternoon. So after a few days, there was some long trigger which got stopped out, about 60-point kind of loss on the Nifty futures. But what it suggests is that you're back to the idea of getting into a range. The sustenance above 15,250 did not happen, so I think 15,250 remains the pivot. And on the downside, we have 14,700, and before that 14,850 as two support levels. So I think broadly, still a market will chop around unless until you see the lower end of the range being taken out now over the next few days. But for the timing, it looks like we are back into the range. The calls that I have, sell on United Spirits, keep a stop at 555, look for targets of 533, and Maruti is a sell as well with a stop at 7170 for targets of 6960.
Okay, Maruti is a sell. Maruti, in fact, has been weakening quite a bit. In fact, on that topic, let me just bring in Dilip Bhatt from Prabhudas Leeladhar. And before we discuss our standout brokerage report with Nimesh, Dilip, good afternoon. I wanted your thoughts on what's happening with some of these stocks where the market's now concerned about inflation. Made this point in the morning as well that perhaps some of the stocks like autos and a couple of other consumption names perhaps could see some bit of derating. But your thoughts on what's happening in this space?
I think in the auto space, as what we have understood very clearly, that there is certainly a ground level demand which has really come up. You can call it a pent-up demand, and you can also ascribe it to so many reasons also. And the momentum is at play. But this within this pack, I think it has been very selective. You have CVs which are doing well, but it is more LCVs which are doing well. And passenger vehicles are reasonably on a sound footing. But two-wheelers and three-wheelers are still down, have still yet to recover. So it has been a mixed bag as far as this is concerned. Of course, the inflation fears time and again comes up. But I think so long as there is so much of money which is available at the moment, I don't think that inflation is going to be really that much of a worry. Also, the fact that most of the central banks want to still follow a very easy monetary policy. And I think that also will add to the tailwind. Overall, I think some of these factors certainly provide a solid tailwind. But the way the things are emerging in terms of the bond yields, in terms of the inflation, I don't think that people are just going to assume that one way, whatever central bank says in terms of easy monetary policy, that alone will be followed. I think that fear still is lurking around the corner. But in short, it is bringing in a fair amount of uncertainty, fair amount of risks, particularly in the emerging markets. And without any doubt, the FIIs with their money are finally calling the shots.
Okay, well, yeah, I guess central banks are trying their best to keep those yields down, including our central bank, right, the RBI. But the market has a mind of its own. It's worried about inflation and it's showing that on the screen. Anyway, let's talk about some of the key movers and shakers today. Today, the whole market selling off, specifically insurance companies, SBI Life, HDFC Life. Many of them are down. But there's an added trigger. ICICI Pru and SBI Life in particular, this after a Credit Suisse note came out downgrading both the stocks. So what's the problem here? Let's bring in Nimesh. Nimesh, what is this note really saying?
Hi, Sulbi. It's an interesting note where they've downgraded both ICICI Pru Life to an underperform now with a target price of 415, and SBI Life is downgraded to neutral with a target price of 900. Now, the key reason for the downgrade is, according to Credit Suisse, the amendment to the LIC Act out of the IPO have mandated the distribution of surplus to the policyholders to cut from 95% to 90% for the par products and from 95% to 0% for the non-par products. Now, for the non-par products, it constitutes 35 to 55% of the business for the private insurers, and this will lead to margin pressure on those private companies. And hence, Credit Suisse has cut the FY22 and FY23 VBN margins by 1 to 3%, which leads to the VBN cut of 5 to 13% for these private players. And Credit Suisse believes that this kind of risk, both in terms of margins and in terms of growth, is not yet priced into the price, and hence they have downgraded both ICICI Pru Life to underperform now and SBI Life to a neutral with a target price of 900 rupees.
Okay, got that. Thanks, Nimesh, for sounding us out on this one. Dilip, good afternoon. I don't know if you could hear Nimesh, but would you share some of this concern on, just bringing the limits down on par and non-par products and the kind of margin damage that one brokerage is pricing in? Or is this really a buying opportunity for some of these life insurer stocks?
Well, without any doubt, the insurance stocks have really run away. And there has been a runaway rise in almost most of the stocks, without any doubt. So I think whenever some of these small changes, one more thing is they are also being, there is very little margin of error in the prices at which they are quoting at the moment. And so the margin of safety has come down. So any new changes that come and which is going to have a negative impact will certainly impact the sentiments. And I'm very sure that at the moment, the insurance companies possibly will see some downward pressure because they're already over-owned stocks at the moment. And the way they have performed, and most of them have really done very well. So I would think that one should wait and watch for a while. One should not really be in a hurry to buy the insurance stocks. Without any doubt, they are a defensive stocks. They can provide a resilience. But possibly it can still be available at a much lower levels from the current levels.
Okay, well, just to revisit this market fall, the Nifty is now down 165 points and the Bank Nifty is down 550 points. So let's just again show on screen the two important graphics. It's a bit of an algo trade which plays out in the market. For a lot of people who want to understand, just to explain, the US 10-year bond yield is right now at 1.597. The intraday high today, in fact, has been 1.614. 1.598 is where we are. The recent peak has been 1.625. And the dollar index, if you combine that with the dollar index, which is essentially measuring the dollar versus the other currencies, is at 91.8. So what happens here is that, as the US bonds start to give more yields, there's always a worry that, the money which has been chasing the emerging markets, makes a bit of a comeback into the US bonds, and that's the move that you had seen at the time of taper tantrum as well. Now, this is of course the near-term move that you are seeing on the market. A lot of people believe that this kind of a move, if it's penciling in a strong growth, actually means that it's going to be medium-term and long-term equity positive.
Yeah.
But because in the near term, everything is driven by flows, and we've seen a lot of flows actually being ETF-driven flows, those flows start to recede, and those flows, start to become outflows. And if you sell HDFC Bank, HDFC, just in the near term, no matter what the long-term view is, in the near term, there's going to be a bit of an impact on the market. So that, in a nutshell, explains what the market is doing right now. We need to take a quick break. We'll come back. We'll have a couple of more questions for Dilip Bhatt. And then, of course, we'll have Christopher Wood from Jefferies, and we'll discuss a lot of issues with him. Of course, the most important being this whole bond yield issue.